I'm sorry, I've got to say it. The only two certainties in life are death and taxes. So said Benjamin Franklin. For a time in the UAE, though, that wasn't true. But with the introduction of VAT in 2018 and a corporate tax announced last year, well, we've got taxes. This is Business Extra coming from the Nationals newsroom in Abu Dhabi. I'm your host, Kelsey Warner. My usual co-host, Mustafa Al-Rawi, isn't with us this week, but I'm told he'll be back soon. Quick note to please subscribe on whatever platform you listen or watch on. Later this year, the corporate tax will come into effect on June 1st to be exact. So, what will you be paying? To help answer that question, I'm joined today by a partner at one of the big four. Wassim Chahine is the head of corporate tax at KPMG for the Lower Gulf. Wassim, welcome. Thank you for being here.
Thank you, Kelsey. Thank you for the invitation.
So just to start us off, I want to get into the nitty-gritty basics. Just if you could share with us what is a corporate tax and what the UAE's plan actually is.
Okay, very good. Excellent. I just want to add on Benjamin Franklin, I want to add that Einstein said that the most difficult thing in the world is to understand the income tax. But I will try to make it simple. So I will try to explain it in simple words. The corporate tax is not related in any way to the employee taxation. Okay, so employees who work in companies and they earn salaries, they are not subject to this corporate tax. So it's only related to companies working in the UAE in general, and for the small to medium enterprises and the large organizations that earn income and derive profits in the UAE. So it is a direct tax levied on the net results of the company, as if we're saying the Ministry of Finance would take a share of the net profits as per the law. So it becomes your partner at the end of the day. And on yearly basis, this result that you make based on your revenues and the expenses and the net profit, you have to compute the accounting, if you want, results, and then come to the taxable results. And then you pay your fair share to the government, and the fair share is dictated to be 9%.
Okay, so the fair share is 9%. And is this applying to all corporations in the UAE, or are there going to be exemptions?
Yeah, I mean, the law, as indicated in the articles, there are exempt entities and there are taxable entities. In general, the UAE corporate law adopted the worldwide tax principle, and they exempted mostly the government and government-owned entities who conduct mandated activities, and they have a very, very narrow list of exemptions. So most of the industries, if you want, are subject to taxation. So the list of exempted entities are very minor. So I can name also the NGOs, the non-for-profit organizations. I can name also certain investment funds, what have you. But very, very limited number of
and oil
industries.
and gas, right? Oil and gas has always been exempt.
Is a little bit different because oil and gas, they've been paying their share tax at the Emirates level. So oil and gas, they pay much more than 9% in every emirate.
So how is revenue actually calculated in terms of what the actual final tally will be annually?
Exactly. So what happened is that the Ministry of Finance, they decided after a long discussions and studies, they decided to have the corporate tax as state of the art, or taking the best practices worldwide. So first of all, they will adopt the international financial reporting standards, or in other words, the accounting standards that are accepted internationally. So any company that adopts the international standard, they prepare financial statements. And to make it simple, most probably they will go for income statement based on accounting basis, and then we will adopt a couple of articles in the law that will take us and reconcile between the financial results and the taxable results. Now, if the taxable results of the entity are positive for the year, then there will be 9% to pay. If the taxable results are negative, so there will be losses during a certain year.
The country owes them money.
No, the country doesn't pay back the money, but you can use the losses and offset them against the future profits that the company will do. So you will not lose any, if you want benefit from having a loss due to certain situations. You carry forward these losses for indefinitely.
We're here kind of in a land of free zones. We're actually sitting in a free zone right now. What does that have to do with this?
Look, the issue of the free zone is very, very controversial. As you know, the free zone is meant to be an area where people, and companies, they are situated and they do business only within this area and outside the country. Now, the issue in the free zone here is that in the past, a lot of people kind of violated this privilege that the free zones give legally, and they did a lot of work with the mainland. That was history, and that was the case in the UAE. But now the Ministry of Finance is drawing the borders between working as a free zone and being the exemption is honored, and doing business with the mainland, which obviously, because of the tax laws, you have to pay taxes on any business you do with the mainland.
Can you
So
define mainland quickly? So anything kind of outside the free zone?
yes, outside the free zones, but at the end of the day, when we say free zone, it means that you do business in this area and outside, mostly exports. So when free zone entities, for example, sells outside the country, this is we call it a free zone activity, and it will be a qualified free zone, and the exemption that was given by the free zone authority will be maintained by the Ministry of Finance. But anything that you do inland, that will be definitely subject to tax, and the Ministry of Finance will issue a specific decree explaining what are the transactions that you do with the mainland. What do you mean by transacting with the mainland?
So if you're an entity sitting in a free zone in Abu Dhabi and you sell a service to a company in Dubai,
Yeah,
taxable.
still,
And you're generating revenue from that activity.
In general, yes,
Yeah.
this is within the scope of doing business in the mainland, and hence it becomes a taxable entity in general. Yeah.
Okay, so I said at the top that this is going to be implemented in June 1st.
Okay.
2023 is rapidly slipping away. How are corporates going to prepare?
Though it's confusing, this 1 June 2023, because it only applies to those companies that have a fiscal year starting after 1 June, which is a very, very minor list. If we compare to the majority of the companies in the UAE, I would say more than 99.5% of the entities, the starting date of this law is 2024. So this 1st of June, it covers only a very, very
It's a soft
minor,
launch.
minor list for companies who, for example, they have their year end ending by 30 August or 30 September or what have you, or July. But this is a very, very, if you want, short list. Now, how they are preparing, everybody is now, it's a reality. I mean, if you recall back in 2017, once they wanted to introduce the VAT, a lot of people were doubting whether the Ministry of Finance or the UAE government is really serious about implementing tax, because, the word tax did not exist for the last 40, 50 years. Now, with the vision of the rulers of the UAE, they want to benefit from the introduction of the corporate tax, and this is why they committed to the OECD, they committed to the international community, and they are determined to turn this into an opportunity. And
I'm sorry to interrupt,
Yeah.
but what you're alluding to really is kind of an international consensus that a minimum corporate tax needs to be introduced in order for there not to be safe havens. Is that correct?
It is correct. Now, as you know, the UAE was on the gray list, and before that on the dark list. But anyway, let me tell you, the UAE has, in my opinion, moved from one state of mind to another, whereby it will take this corporate tax as an opportunity to increase the business environment incentives, and incentivize the international foreign direct investment to come to the UAE by the mere fact of introducing only 9%, as compared to 180 countries in the world where they introduce they have the corporate tax in place, and on average the tax rate is around 23%. The European average corporate tax rate is around 21%. So once you introduce 9%, and you give all these kind of incentives and facilitate things for the foreign as well as to the local SMEs and the local companies. You are incentivizing the economy. So this is going to be definitely a kind of a push for the international businesses to come to the UAE for sure.
So what can we expect in terms of what this tax revenue will actually mean for the UAE's economy?
The official figures are not yet published by the Ministry of Finance, so I don't want to pretend that we know exactly how much this corporate tax will bring. But let me tell you two things. First of all, there'll definitely be a direct increase of revenues or source of revenues that the UAE was trying to diversify for the past 40 years at least. I've been in this place, so I can see how they are diversifying from the hydrocarbon sectors and what have you. So they are trying to have different sources of revenue, and definitely the VAT was a big success for them. Though it is a 5%, which is a peanut compared to other VATs introduced in the world. So now with the 9%, also the rate is the lowest in the world, but the revenues are huge because what they want, they are expanding their GDP, and definitely the 9% will be a good revenue, direct revenue for the government. The indirect, I would say, benefit, they will outweigh the direct, if you want, income to the UAE federal government. The indirect ones, how to encourage use of the double taxation treaties with the other countries. They will use all the foreign tax credits. They will encourage people to come as family offices here. They will encourage the holding setup and so on and so forth. So this 9%, I think it's a great opportunity for the UAE, especially that there is a consensus in the whole world, and 137 countries have already signed to the agreement, which would to adopt a global minimum tax of 15%, what we call BEPS, which was base erosion profit shifting. It's kind of a agreement to simplify that. It's an agreement among 137 countries to make the big multinational enterprise pay, at least in the jurisdiction they generate income, to pay 15%. So if UAE does not introduce the corporate tax and they don't sign to this agreement, then the taxes will be paid at the head office level, which the UAE doesn't want.
They would lose out on.
They will lose out.
They would lose out. So
Very true.
they're getting a seat at the table.
Yeah.
Wassim, Chahine, that's all the time we have for today. Partner at KPMG. Thank you for being here.
My pleasure. Thanks for hosting me.
And all that's left to do is to thank our production team and you for listening. See you next week.